What do you make of what Savita just said there, that basically good year for the economy, good year for earnings, but a lot of it's already priced in?
Well, thanks, Tyler. Look, I've got a lot of respect for Savita. I actually agree very strongly with the first two parts of that. I think it will be a good year for the economy. I think it will be a very good year for earnings. Where I would disagree a bit is the last part about stocks and risky assets. I think they will also have a reasonably good year. And let's break this down for a second. If we think earnings are going to go up, the only way stocks are not going to go up is if you see some type of multiple compression. And the question I would ask is, in an environment in which we're very confident the policy rate from the Fed will be pegged at zero, we're very confident we're going to continue to see asset purchases on a massive scale, it's not obvious why market multiples would decline. So if earnings are going to be strong, the economy is going to be strong, and multiples can be stable, well, then stocks should go higher.
So what kind of year does that imply? Does that imply, we did a segment yesterday on various predictions from the street on where the S&P 500 would end the year. I think 4,500 was the high, and J.P. Morgan, the low, I think, well, maybe I better not say the name, was about 3,500. I don't remember. I don't want to put somebody under the gun there. Is it a double-digit gain year for the S&P?
We don't do a specific forecast, but I do think you're going to have a solid year for stocks. And I think one of the key things is going to be, where do you invest in the market? I was just listening to the segment before with Bob, and, there's this debate going on. Do you bottom fish in deep value? Do you stick with the secular growers? And I think the one thing lost in this debate is, there is an alternative. There is a middle part of the distribution, which is neither the deep value names that are very tied to the recovery. It's not the secular growers necessarily, although there's some names in there we like, but it is what we would call the forgotten middle. Names that are neither pure growth, they're not pure value. Some of them are in the less sexy industries like chemicals, industrials, rails, that are still levered to the recovery, but have very solid business models or high quality. These are the types of places we think you can make the most hay in 2021.
Shepard Smith here. Thanks for watching CNBC on YouTube.